Let me ask you something. Have you ever entered a breakout and within 2 candles, price reverses? Or you short after 3 big red candles and that was exactly the bottom? That's not bad luck. That's bad momentum timing. And today I'm going to show you a zero noise momentum setup that helps you enter before the big move starts, not after. And yes, I'm giving you the free Pine script as well, so watch carefully. This is what I call the market killer setup, not because it predicts the future, but because it eliminates noise. It's built on just 3 things: the gravity trend oscillator, the ZLSMA 50, and the previous day high and low. That's it. No 10 indicators, no cluttered chart, no guessing. Now here's the important part. This strategy is specifically designed to catch phase 2 to phase 3 momentum expansion. And if you don't understand what that means, that's exactly why most traders struggle. Because most traders, they enter in phase 4. They buy when the move is already stretched. They short when the market is already exhausted. They react to big candles instead of structure. And the market punishes late entries. So before I show you the exact entry rules, you need to understand these 4 phases of momentum. Because once you see this, you'll never chase a breakout the same way again. Now let's talk about the first and most important component, the gravity trend oscillator. This is your momentum engine. This is what tells you whether the market is actually building pressure or just moving randomly. Here's what it shows. When you see green expansion, that means buyers are gaining strength. When you see red expansion, that means sellers are in control. If it crosses above the 0 line, that's a bullish momentum shift. If it crosses below 0, that's a bearish shift. And when you see deep expansion, that's acceleration. That's when the move is starting to build power. But listen carefully. This is where most traders make a mistake. You do not trade the color. If you trade only green and red color changes, you will get chopped in sideways markets. You trade 3 things together: shift, expansion, trend alignment. That combination is what filters noise. Color alone is a trap. Indicator 2, ZLSMA 50. Now let's talk about structure. Normal moving averages lag. By the time they confirm a trend, half the move is already done. That's why we use ZLSMA 50, zero lag simple moving average. It reacts faster, and the rules are very simple. If price is above ZLSMA, bullish bias. If price is below, bearish bias. If the slope is strong, trend is strong. If it's flat, stay away. Flat ZLSMA means sideways market, and sideways markets destroy momentum traders. This indicator keeps you aligned with structure, no guessing, no counter-trend gambling. If trend and momentum disagree, you don't trade. Simple. Indicator 3, PDH and PDL, liquidity. Now this is where things get interesting. Previous day high, previous day low. These are not random lines, they are liquidity magnets. Institutions place stop orders around these areas. So what happens? If price breaks PDH with strong momentum, that usually leads to continuation. If price rejects PDH and momentum shifts, that can become a reversal scalp. Same logic with PDL. These levels give context, because an oscillator signal in the middle of nowhere is weaker than an oscillator signal near liquidity. Structure plus liquidity equals smarter entries. Now let's combine everything. This is where the edge is created. We are not using indicators separately. We wait for alignment. Trend direction from ZLSMA. Momentum shift from the oscillator. Liquidity context from PDH or PDL. When all 3 agree, that's phase 2 moving into phase 3 expansion. That's when the real move starts, and that's when we execute. Alright, now let me quickly show you how to set this up on TradingView. Don't worry, it takes less than 2 minutes. Step 1. Add the Gravity Trend Oscillator. Open your chart on TradingView. Go to the bottom and click on Pine Editor. Now paste the Gravity Trend Oscillator script that I've provided. Click Add to Chart. That's it. You'll see the oscillator appear below your chart with green and red expansion, buy and sell labels, 0 line. Keep the default settings for now. Don't over-optimize. The power is in structure, not tweaking. Step 2. Add ZLSMA 50. Now go to Indicators at the top. Search for ZLSMA. Add it to your chart. Then open the settings. Change the length to 50. I personally use a yellow color, so it's clearly visible against candles. Now you have your trend filter. Step 3. Add previous day high and low. Again, go to Indicators. Search for previous day high and low. Add it. If you prefer manual control, you can simply draw horizontal lines at yesterday's high and yesterday's low. Keep those levels clean and visible. Don't add 10 extra lines. Remember, clean chart equals clear decisions. Cluttered chart equals emotional trading. And that's it. 3 components: simple, structured, professional. Now that everything is set up, let me show you exactly how to execute the perfect trade with this setup. Now let's talk about the high probability sell setup. And listen carefully, this is not a random short. This is a structured short. You take a sell only when all conditions align. Condition number 1. Price must be below the ZLSMA 50. If price is above it, you don't short. Simple. Condition number 2. The oscillator must cross below the 0 line. That tells you momentum has shifted from bullish to bearish. Condition number 3. The sell label appears. That confirms the shift. Condition number 4. The red histogram must be expanding. Not flat, not weak. Expanding. That means selling pressure is increasing. And condition number 5. There should be no major support immediately below your entry, because if you short directly into support, you're asking for a bounce. Now here's why this setup works. You're entering at the start of bearish expansion, not after 5 red candles, not when the move is already stretched. You're catching phase 2 moving into phase 3. That's where the edge is. Stop loss placement. Your stop loss goes above the recent swing high, or slightly above the ZLSMA. Why? Because if price reclaims that level, momentum structure is invalidated. You don't argue with the market, you exit. Target strategy. Minimum 1 to 2 risk reward. If you risk 10 points, you aim for 20. Simple math. Now here's the advanced part. As long as the histogram is expanding, you stay in the trade. The moment it starts shrinking, momentum is slowing. That's your signal to protect profits. Maybe trail your stop. Maybe book partial. But don't ignore contraction. Expansion pays you. Contraction warns you. And remember, if you see 3 huge red candles already printed and the histogram is fully stretched, you're late. Professionals enter when pressure builds. Amateurs enter when social media says, big breakdown. Be early, be structured, be disciplined. By the way, if you're serious about improving your trading, not just watching random strategies on YouTube, I've structured everything properly inside my ebooks. All of them are now available on Gumroad. Just go to Google and search Ultimate Trading Bundle 2026 Gumroad. Inside that bundle, you'll find structured intraday strategies, options trading frameworks, a full CPR masterclass, custom indicator strategies, Forex short selling systems. Everything explained step by step. No fluff, no recycled content, just structured execution models. But listen carefully, don't jump from strategy to strategy. First, master this setup, backtest it, practice it, understand expansion and contraction, then add complexity. Because stacking strategies without mastering one is exactly how traders stay confused. Focus first, scale later. Now let's talk about the buy setup, and this is very important. We don't buy just because the candle is green. We buy only when structure and momentum align. Here are the conditions. First, price must be above the ZLSMA 50. If price is below it, we don't buy. No counter-trend guessing. Second, the oscillator must cross above the zero line. That's your bullish momentum shift. Third, the buy label must appear. That confirms the transition. Fourth, you need strong green expansion, not tiny bars, not weak movement. Expansion. And finally, there must be a break of consolidation or a clear resistance level. Why? Because break plus momentum equals continuation. That's where expansion begins. Now let me tell you when not to buy. If the green bars are small, if the ZLSMA is flat, if the market is moving sideways inside a range, you stay out. Strong expansion equals real move. Weak expansion equals trap. Don't fall for traps. When not to trade, this saves accounts. This part is more important than entries. Avoid trading when the ZLSMA is flat. The oscillator keeps flipping colors repeatedly. The market is in a tight range. Volume is low, or right before major news events. Momentum strategies only work during expansion phases. No expansion, no trade. And remember this line carefully. No trade is also a position. Overtrading destroys more accounts than bad strategies. Risk management, non-negotiable. Now let's talk about what actually keeps you profitable. Because even perfect setups fail sometimes. That's normal. Here are my strict rules. Risk only 1 to 2% per trade. If you hit 3 consecutive losses, stop for the day. No revenge trading. No averaging losers. Always calculate your position size before entering. This is how professionals survive. You can be profitable with just a 50% win rate if you maintain a 1 to 2 risk-reward ratio. But without discipline, even a 70% win rate trader will blow up. Indicator doesn't protect you. Rules do. Discipline does. Always. Now let me make one thing very clear. This is not a holy grail. There is no holy grail in trading. What this is a structured execution framework. It helps you identify early momentum, avoid fake breakouts, trade only during true expansion, protect your capital, and that's what matters. Because the indicator doesn't make money. Execution does. Discipline does. Patience does. If you master just 3 things,